How you doing, friends? Ernie here, and this is 0 days to expiration, the final hour trade. The final hour trade is a experimental trade in our service. We put on a lot of experimental trades. We test them. We test the hell out of them. And in particular, this one here, where we're now on our 72nd trade online. With this, I had committed to doing 100. Now, actually, we didn't take a full 72 trades because there are some times where we don't take a trade. We count those as well. I should say 100 trials. So we're at number 72. Excuse me. We split it up into 50 here, 50 there, right? So we did the first 50, very successful. Now we're on the second 50. And not so successful, but really not that bad either. I mean, we're basically even, down $89 after 22 tries. And it's been a very, very trying 3-4 weeks, basically during the majority of that bear market rally. Now, does it have something to do with the bear market rally? I don't know. That's okay, though, because that shows us going through two very distinct market types. And so from that, we're collecting a lot of great information about this final hour experiment. So the experiment really isn't just the final hour. It's more like the final 45 minutes or the final half hour to see if we can make a trade that makes sense. Now, before we get started, and let me just say, let me take a look at the markets first of all. It's right back here. This morning I had called for, well, I didn't make the call, actually. I told people to stage this trade, and then we do a morning meeting. And then during that meeting, I conduct trades and lead people in trades. And one of those trades would have been very nice here, but I'll explain that in a second. Just show you today's analysis. Let me bring all of this into view. All right. Squeeze that a little bit. There we go. All right, so the yellow lines, why don't I just bring this right online so you can see it. There we go. So the yellow lines, as well as the purple line, those were, let's see, I'll just make that one yellow so there's no confusion. Every morning I do a market analysis and a structural analysis and then come up with what I believe are what the market might do that day. And today was what I considered a special day. It's a day of reckoning, I guess you could say. And I thought today would be the day. If today isn't the day, then tomorrow will be the day. So this is the idea that we've been on this bear market rally for several weeks. It appears that we're coming to some sort of conclusion to that rally. And today I felt like it was either that conclusion or we're going to have a very tight doji or inside day or something like that. And so that's what I am saying here in this chart. What I'm saying here is that here, either we're going to break out above this green line, which is an LVN, or we're going to break down below this green line, or we're going to go back and forth inside the green lines. And so, it's either a breakout or breakdown, or we're just going to go back and forth. And so far, it's just been the back and forth, as you can see here. We've gone up, we've gone down, we've hit the top, the bottom, and now we're back up at the top of this, in between these two LVNs. An LVN, low value node, what it means is that this shaded area above and the shaded area below represent the edge of very large volume nodes. And in market profile, volume profile, and our structural analysis, those LVNs, or those low volume nodes, represent areas of, you can call them like gates, right? Either we pass through them very quickly or we get rejected by them. And when there's two like this, it's kind of a special case. And that opens up, because it's such a large expanse between the volume nodes, it's a special case where you might start developing a small child node in the middle of them. And that's exactly what we're doing. And you can see that by the volume profile here. And so that's where we're at. We're either going to break out, break down, or continue in that child node. And so far, it's just been continuing in that child node. Now the question is, well, where's price going to go? If I had to guess, I'd say that we're going to return right to the center of this child node, which is sitting currently at about 42.78. Let's call it 42.75. That's probably the closest strike that we can come to, that makes sense. We're looking at the E-mini S&P, and we're going to be trading the SPX. There's about a 2-point difference, so the SPX being a little bit lower than the E-mini. So let's call that 42.75 right in the middle there. That's going to be where I believe that the market will end up today, if it doesn't break out. And I don't think it's going to break out today. So that's my trade. And I'm going to put that on. Yeah, let's bring that microphone down here a little closer. Maybe we'll increase the volume a little bit. Oh, we got to do a roll call. How can I not do a roll call? So what I'm showing here, by the way, is 4 trades that I'd made during our morning session. And I wanted to show how I could make 4 trades. And now currently, this is a small account that I have here. And the point of me doing it on this account was to show that how I could make 4 trades while having 3 strikes against me on the pattern day trader rule without violating the pattern day trader rule, and doing something that we call the PDT hack. And with the PDT hack, I can completely avoid the pattern day trade and still be able to work out a profit. As a matter of fact, today I did exactly that. And I created, now if you look very closely at this profit curve, you'll notice that it's the top part of it, it's sitting at about $80, and it goes all the way to the right. So that's a guaranteed $80 profit. And should the market break down and go below 42.50, then there's a potential for making $580. So I did that with these trades that I put on, that essentially all I have to do is just hold on to them until the market closes. And because the S&P SPX, options on the SPX are cash settled, everything will just zero out, and I will be left with $80 minus the commissions, which will be about $1,000. Now, I was going for something bigger, but it didn't work out that way. I was trying to get into a butterfly that I had on, and it looked like the market was going to break down, so I just decided to take the profit. And in hindsight, that was a mistake. Well, it wasn't a mistake. It was, in hindsight, had I been a seer, had I been Karnak the Magnificent, I would have known that, hey, you should hang on. It's not actually going to break down like you think. It's going to go right back up like you didn't think. But it didn't do that. So it did do that. In fact, I had a fly that was centered right around where it is right now, about 42.95. And so we would have been sitting very nicely in the middle of that fly. So let's see here to sort of explain. I'll go into what the plan was at the beginning of the day. Now, because we had these 2 LVNs, the 2 green lines that I showed you, they kind of defined a channel that the market has been working in the past few days. I decided that, hey, let's play the channel. Let's play the top and the bottom of the channel. And so what I did was I created the following. Hold on. So we created the following scenario where we would have these, we put on A would be the fly that would be where price is right now at the top of the channel, and B would be another fly at the bottom, but we wouldn't put on B right away. What we were waiting for is for price to go down to the bottom of the channel so that the A trade becomes cheap enough to put on. And so that happened. We put on the A trade, and then we were going to wait until price went to the top of the channel so that we could put on the B trade at a good price as well. And then just play between those two. But what had actually happened was, instead of putting on the B trade when we went up near A, I put on a broken wing condor or iron condor. And that's part of a new trade idea that we're going to turn into an experiment after the final hour trade experiment is over in about a month or so. But anyways, the idea between with that is, I'm not going to go into it in great detail, but we're talking about rolling weak sides until we turn it into an iron condor and essentially still play what we consider a symmetrical fly. I'm sorry, an iron fly. But anyways, that's what I did. I put on, which I guess you could say is the equivalent of this B trade, but a little bit better position. And that reduced our overall risk for the A trade. It started to come down and then up and then started to hang out in the middle. Profit all this time is expanding because Vega started to go negative. And so the profit curve came up. It didn't look like at the time that we were going to make our way back up to the A trade here. It didn't look like we were going to do this. We were sort of going back and forth like this, and I thought it was going to come back down here. So I decided to grab the profit that was in A, which at the time, looked something like this. Oh, that's I want the purple line. So at the time it looked something like this, right? And sitting right here. So I decided to lock that in, which I did. And price looked like it was going down this way for this structure. And so I was looking to make profit down there as well. But it didn't. It came right back, and now it's here and sitting right in the middle of where that fly would have been. All right, so that was the mistake of the day. But still, I locked in profit, and everything was good. All right. So those are the type of things that we do in our, in our room. And now I'm sitting here with this rather unique position where you can see that I've locked in $80 of profit across the board, maybe a little bit more. And then if the market were to drop drastically, you can see that there's the potential that it would make as much as $580. So it's a riskless trade that we ended up with. And doing this all while I had 3 strikes against me on the pattern day trader rule, and without violating that at all. So all I have to do is just wait for this to come to fruition. All right, so let's get back to the trade for the final hour. I guess the question is, are we going to break through this LVN and move higher? That is the big question. But before we do, let's say hello to the people that are on the chat, right? So we have Multiscan 8. How you doing, man? And we have is here, and has a comment. I don't think it's the rally. I think it's the poor results are more to do with the action that isn't following expectation, more to do with politics. Well, yeah. I said something about the rally. So that's, I wasn't trying to say that the rally itself, bear market rallies are that way. And this has definitely been an unusual rally. It seemed to defy all logic, while the country and the economics of the country are just in the toilet and the highest inflation we've had in 40 or 50 years, and being in recession, yet the market is still going up because of the expectations of what the Fed is going to deliver from a political reason. You're right. So I definitely think that has something to do with the odd behavior of the market and the difficulty there is in actually trading it. All right, so we have Clayton. How you doing? Hans is here. How many legs? Well, there were actually 3 butterflies. Well, not 3. There were, essentially the same as 3 butterflies and 1 vertical that I put on to create that trade. So we're talking about, maybe $18 in commissions or so. So there is that. Of course, I was going for a lot more money too, and so I'm happy to have any kind of profit there. All right, how you doing, Jim? And Vadim is here. How you doing? And Jeffrey Randolph and Robert Weitzer. Hi, no comment needed. Okay. Good clarification, because this method will work regardless of the direction of the market. Yes, I agree 100%. And Swapnil, I agree with Robert Weitzer above. No comment needed. Yeah, it's not... I wasn't trying to be political, and it's hard not to bring politics into trading because politics do definitely affect the markets. The one thing I just want to comment on is that the Fed professes to be independent, that they're not beholden to any political party. While this is true that they're not beholden to any single political party, they are beholden to whatever political party is in power because of, political reasons. And they want to keep their job. So I feel that, the Fed is constantly trying to placate whatever party is in power, whether it's Republican or Democrat, doesn't matter. So while there's no comment necessary, and it's hard to bring in, you don't want to bring in politics into a discussion like this, but you also cannot ignore it when it is blatantly obvious that they do it for both sides, that they will try to monetize whatever spending package that the current ruling party will put up there. And by doing that, they create the inflation. I mean, you can say that ultimately it is the responsibility of whoever's in power that creates the inflation. It's government spending that creates inflation, nothing else. All right, so that's all I wanted to say. All right, Adam wants to know, Ernie, any significance in the 4,300 call and put volumes? Pretty outstanding compared to the rest. All right, let's take a look at that. Let me just bring the microphone a little closer to me. And we'll go to the options chain and check that out. So at 4,300, there were 57,000 contracts. We've been watching this all day, and at 2250, I believe, was the other. Yeah, it is 2250 on the put side. And at first, earlier in the day, the 4250 seemed to have the edge, and then the call side started to move ahead. Is there any significance to it? It's hard to say because they seem to swap, and it does look clear that there are definitely more calls than there are puts when you look at this. I'd have to really do an accounting to really be able to tell, but that's the way it looks. So, does it have anything to do with where price is ultimately going to go? We've had that hypothesis for a while, and we've tested it out, and it's not true. It would seem that price tends to gravitate towards to the highest strike. It tends to, but then doesn't always end up that way. So If the question is, will price end up at the highest strike? That's like asking, will price end up at max pain? That's another theory that people have. And it doesn't. It just doesn't end up there enough times to make it statistically significant to trade on. 4,300 on put volume as well. Yeah, not so much. But what I can tell you is that it looks like it's trying to break through the top LVN. And so that is significant. If we do get through there, I think that we can run up. It's 336. I'm not so sure that the market's willing to start making this trek right now. All right. Let's see. Let's expand this and take a look. Yeah, so it's, these lines aren't exact, within a few points. So, it could be up here as well. But I think that, it's pretty close. It's pretty close. What we know about these LVNs that we encounter is that there are orders sitting on both sides of this for, the bull and the bears. And I suppose, you could look at the strikes that are in the options chain and just say, hey, look, the bull side definitely has more. And it looks like that's where the market wants to go. But if it does, it could move rapidly. Now, where would it move to? There's another good question. So we'd have to take a bigger view and see if we can determine that. I don't know if we'll be able to see that. Let's see. We'll have to go to a daily view. All right. So there is an LVN right there, but it looks like price has already gone through there, and it's almost... Is that where it is already? Wow. While I was talking, let's see. Let's go back there. No, it's not. So there is another LVN. That's from here, from yesterday. All right, let's go back to the daily and find out where that LVN is. It is right there. Right there at 4307. All right, let's zoom in on that. All right, there it is, 4307. If I were to guess, that would be the destination. It's either going to be that or here, this POC. All right, that's a pretty wide range, and it doesn't look like it's going to give it up there. So I don't know. Let's go to the chat and ask. Are we going up or are we going down from here? So I believe that it will be either the 430, let's call it 4305, will be our target, or 4280. There's our two targets. Which one is more likely? What do you think? I'll type it in the chat. Which is more likely? 4305 or 4280. Let's see if we get a consensus here. Adam says 4305. Robert says 4280. Are we going to go like right down the middle? You know, I look at this run up and you got to wonder, we haven't been, we broke through rather rapidly. We didn't spend too much time. But he prefers 4275. But if we go to 4275, it has to go through 4280, so you would win regardless. Jim says 4285, which is also in the same ballpark. Yeah, I'm leaning there. Double top on QQQ, so I'm sliding with the pullback. It says is. Right? You asked more likely, yes. I said between those two choices. Those were our two choices. That's okay. Yeah, Jamie says, sorry, I'm going right down the friggin' middle. You can't lose there. But that's where we're at right now. Xanth says 4291. Multiscan says 4295. So it sounds like everybody is saying, most people are saying lower. All right. So let's take that on advisement and say that 4285. Alan is playing contrarian. He says, my heart says 4280, so that means 4305. Yeah, I don't know. I don't want to make this another no trade, but I'm just up in the air. We're sitting here right on a gateway. Either we're going to get rejected or we're going to go through it. All right. So it's mostly on the side of lower right now. So that's what we're going to go for. Let's put that on. 4280. So if I put this trade on, I can put it on with no risk here, as you can see. I'm going to give that a shot. Now watch when I do this. It's going to give me a warning. Should I go 5 wide or 10 wide? Let's go 10 wide. What the hell? Let's live a little. I can't do it without going in the negative, and it's going to cost too much. Yeah, I don't want to do that. You can do it, but I'm not going to do it. So I can do this and still maintain a day with guaranteed profit. All right. So I'm going to put this on. Now watch the error. See, this warning comes up saying that if I only have 1 day trade left, that's okay because I'm not going to take it off. Let's see if I get filled. Will I get filled? Oh, put it on for 30 cents. Not going to get filled at 30 cents. I'll have to cancel and replace to at least 35 cents. Let's go to 40. There's the error again, a warning. All right, it filled. All right. So there's not much I can do other than watch. And we'll see what happens. Where is price right now? Is that the trade? No, that's not it. Let's see. Let's go to the line here. We said 42.80. So if we, or was it 42.85? Okay, you say the market is directional and on both sides a butterfly is not okay, but often I see the long or short may be possible. My math says 2 butterflies for 30, one winner, and the only one is. So you're saying put, straddle the market with 2 butterflies? The problem with that is that I guess is answering you. He's saying there is the double your risk while keeping the same reward. You can't do it, but your profit curve will look different. That's right. You're going to be taking on double the risk all the time. So that's why we don't straddle these anymore. We used to think that that would. You see, the problem is, Robert, it's not about increasing your probability. It just isn't. It's more about your risk to reward. If you can maintain the risk to reward, ultimately you're going to be rewarded for that. So what I'm looking for is for the market to come down between what was the trade? That was this one right here, 80, 85, 75. So anywhere inside here will be good. Come on, baby. Robert, the math doesn't work out in the long run. Sorry to say. It just doesn't. Come on. We're shooting for that 80 strike. I can't take this trade off, by the way. I'm stuck. So it's like do or die. Let's not really die. The most I'm going to lose is $40. But if it ends up here, it's like a one for 10, you know? I have, I don't want to. I have too many trades open. Just going to let it ride. So there's under 6 minutes left. I would say that if, you might be in profit right now. If you are, well, you're definitely going to be in profit right now, but it's got to be worth something. What is it worth? I don't know. It's hard to tell because with That's crazy. Yeah, I'm right, almost right in the middle, right there. Right at 42.80. So where's price on this guy here? I have to adjust this. We're actually up by, what, 2 points. So this is more accurate if we're looking at the SPX. This is the ES, so it's off a little bit. But from an SPX point of view, this is where we're at. We're almost directly in the middle. With less than 3 minutes to go. Seems like time is moving slower. Does it seem like time's moving slower? All right, so there's less than 2 minutes to go now. Can it stay here for 2 minutes? Can we pin the trade? You know, if we pin this trade between final hour trades and also regular 0 DTE trades, we will have about 4 pins in the last week. That is insane. That is absolutely insane. Was it 4? No, 3. We'll have 3 pins. That is correct. It was 42.85 wide at 40 cents. So everyone else can see. That was the question here. Less than a minute to go. Well, it'll be good if it stays here for the next 30 seconds. It jumped out. I don't know what the close will be. I think it jumped out at the very last moment, but it's hard to tell because they take an average. I don't know. Let's see if we can go to the fixing price. And see what the S&P is at 42.86. We might be okay. because it's about. I don't know. Let's find out the closing price of the SPX. It says 42.84. Wow. So it means that I was just inside of the profit tent. All right, that's good. Made some money. That's what it says. Didn't lose any money, that's for sure. It may have been just even, I guess, but that's okay. All right, let's go back. So it looks like, just came in under the wire. Probably made, I'm going to guess and say between $20 and $50 on that. I'll find out later on, once everything is settled out, exactly what was made. But it was definitely in there. It's close. It was amazing that, the last few seconds, it wanted to evacuate the area. So it's hard to tell. Really hard to tell. So if we were to look at let's go to the SPX, because that's the only one that really matters. Yeah, it looks like 42.84 was the closing price. At least according to this. So I know, doesn't that suck? That 4-point pop cost me $400. Yeah, that's approximately what I see too. But, when you look at the actual chart, it says 42.12. I'm sorry, it says 42.84.12 or 42.84.14 is what it says. So, who knows? It's somewhere around there. Well, that's not bad. I'm going to guess and say that we made about $25 within 4 seconds of making $400. That's crazy. So the key there was that, again, it came back to the point of control for the day, for the session. It's done that many, many times. So we'll squirrel that piece of information away. There's your final hour trade. At least it was a winner. And, we're still flat, though, in this second half of this experiment. First half, we were, wildly up. I don't know how much, but a lot. The second half, down now by about, I'd say, $50 after 22 trades. Today's trade, though, earlier in the day was another successful trade, so that's good. And we'll go from there. If you're interested in the service, just go down below in the link. You can see it there. All right. Thank you all very much. Peace to you all. Time to get going. Have a good night.